All right, everyone. So thanks for joining. And today I'm going to talk about 7 costly mistakes you can make in note investing. So these are based on largely my own personal experiences and a lot of these lessons that I learned the hard way. And then I actually ended up with more than 7. So let's get into it. So if you're not familiar with me, I'm a full-time note investor, have been for a while. So I got a portfolio of about 60 notes or so right now. And then I also teach other people how to get involved in notes. I like the note space in particular just because, well, for one, you can get higher returns, a little higher return. If you're buying performing notes, you can get a little higher return than the long-term stock market average with a lot less volatility and higher returns than say you would get like in the bond market or treasuries or things like that. And unlike other forms of real estate investing, there's just a lot less competition. So I find it, even though it's a smaller kind of nichier space, I find it an easier space to operate in. I started my career as an engineer in the aerospace industry, later went on to get an MBA and be a product manager in the tech industry. So worked for companies like Oracle and AWS, also did startups. Have always been investing in some form or another, started in stocks when I was 19 years old. That's my fiance Allison. So there's our trip to Iceland last fall, and then I've got 2 daughters as well. So, but yeah, right now I manage a multi-million dollar note portfolio. Also acquired a company called The Underwriter towards the end of last year, where I help investors originate seller finance loans. It's a little different business. So I'm not talking about that so much today. Today I'm talking a little bit more about the note buying end of the world. And I do love helping investors get started because I think this is a very cool, profitable, lucrative niche. And I think more people would be involved and make more money in it if the information was just more transparent. So that's what I'm focusing on doing now. So you're in the right place in this webinar if you're interested in learning about how to make money buying mortgage notes. And that matters whether you have never bought notes before or whether you have some experience in it and you want to expand or learn to do it better. And it's also good, yeah, if you've already bought some notes, like there are a lot of people who have bought notes, but they didn't necessarily have awesome processes in place or maybe made mistakes along the way. So if you've done notes, but you want it to be a little bit easier and a little bit more profitable, then this is also a good spot for you. And so it's also good for you if you want to learn from the mistakes that other people made, right? So the mistakes that I talk about in here, a lot of these, like I made myself the hard way, right? So there's a lot of value in being able to look at what other people did wrong and then just learn from that without going through the pain and agony yourself. So hopefully I will be able to save you a lot of heartache throughout the process of this webinar. Now it's not for you necessarily, and if you followed my stuff for any amount of time, you'll kind of know this about me, right? Like I'm not a rainbows and unicorns guy. A lot of people are attracted to material that tells people like how easy it is to make these really high returns with like no work and no money in the deal. That's not what this is. In fact, like this webinar in particular, the mistakes, right? This is all talking about the pain points of note investing and a lot of the rough edges that you will run into in some form or fashion. So this isn't like, you know, some big like Eureka thing, like it's all easy. No, I'm actually going to talk about the hard stuff. And, you know, it's also not great for people who are in the, process of just kind of like consuming information and not actually doing anything or maybe doing things, but doing them really, really slowly. I really enjoy working with people who have a mission and a goal and they want to take action and do stuff. That's what I enjoy. So, you know, going really slow, that's good if you're like cooking a brisket or something like that, but that's not necessarily what business is. So time is really valuable. We all have a limited amount of time on this earth. And so speed matters. We want to go fast, but then also go fast correctly. And that's what I like to help people with. So I'm going to share 7 common mistakes in note investing and how to avoid them, and also some bonus mistakes. And then I'm going to have some other bonuses for you if you stay until the end. So for watching this, I really recommend, I know it's, you know, it's Friday morning when I'm recording this. But I really recommend removing distractions, close those extra tabs and get ready to take some notes. Feel free to ask questions. You can either put them in the chat or the Q&A, and I will do my best to get to those. And like I said, we'll have some bonuses for you if you stay until the end. So to talk about how I learned, how I made some of these mistakes and learned from them, I want to talk a little bit first about kind of my personal journey in note investing. So, I went into note investing originally with some specific goals. And those were to, number one, I wanted to diversify away from my W-2. I didn't necessarily want to leave my W-2 full time, but I wanted to have a side business that made money so that I wasn't as entirely dependent on a W-2. So, having worked in the aerospace industry, doing government contracting and kind of being a little bit subject to the whims of, government budget surpluses after 9/11 and then, budget cuts. I didn't like having that lack of control, and then definitely working in the tech industry that can have its own ups and downs. With everything going on right now in the world, maybe you're experiencing some of that yourself. I wanted something that I had more control over, right? And then I also wanted to have fun making money. So I think I mentioned earlier, I started buying stocks when I was 19 years old. I had dabbled in options trading, for a while. Like I find I've also played a lot of poker in the back in the day, not so much in the last 15 years. But I've enjoyed having these little areas that I can study, learn more about, gain an edge, take chances, participate, and then make some money while having fun along the way. The start of my note investing career was a little bit rough. Honestly, this is like an AI image of me as a frustrated note investor, although that doesn't look anything like me at all. But definitely had some challenges out the gate. I joined a $15,000 mastermind, right? Because my idea was, okay, I want to do this and be serious. I want to learn as much as I can. I don't want to go as fast as I can. And that was, was it worth $15,000? No, probably not. But I did meet some great people. It did help me get up and going and successful. And actually, I met some of the same people that I, work closely with today still, right? So like folks like Chris Sevigny and Cody Cox and Daphne Peterson and a bunch of others. The problem with that mastermind and the training was that it left out just tons of details. It was very like high level, kind of superficial. So when I started doing a lot of deals, I started running into all kinds of problems, some of which are mistakes I'm going to mention in this webinar, that would have been really super helpful to have known in advance. So the guru guy that ran this, in a way, like I was successful in getting up and going. But that guy definitely didn't deliver what he promised. So for the first, year or so, I was kind of struggling. I kept running into problems I didn't expect. Just issues with deals taking a long time, flaky counterparties, buying land contracts and running into issues with the local code board. Getting REOs and selling them and finding out that you can't just trust the BPO value, like all kinds of stuff that someone could have just easily told me about up front and I didn't know. And it just made the whole process a lot more painful than it needed to be. So, especially out the gate, I was kind of struggling. I was also mispricing assets. I had too much reliance on vendors. Like I thought that I could just hire vendors, attorneys, realtors, loan servicers, and they would just kind of like take care of stuff for me and I would have magical happiness. And that's not how it played out at all. And, it was pretty stressful overall because I was also just not used to this form of investing and some of the ups and downs that you get into. And of course, like, like a good MBA does, right? Like I made all these, projections and plans and I was not living up to them at all. And that was super frustrating. But I did kind of put the pieces together, right? Like piece by piece. All this stuff, it kind of takes a long time and things started to snap into place. And then I'm a big systems guy. So I started building my systems, documenting them, updating those systems as I learned new things. And I started scaling up my note portfolio. I went from the first note to 10 notes to 20 notes to 30 notes. And these processes got better over time. And then I really started to grow. And so I went from this kind of like scared, scatterbrained guy to a guy with a bigger portfolio, was bringing on outside funding. And then it, really started to produce money. So that whole time, that gear up phase, like I started looking at notes around like the very end of 2016. I bought my first note at the end of 2017. So about a year, like to buy the first one. And then during the course of 2018 was when I started going through that scale phase. Today in 2025, I've got a really nice, scalable portfolio. I think I mentioned right around 60 notes right now. And so, and my kind of my takeaway from a lot of this is that note investing, while there's some details and some nuances, it's not that hard if you know what to do. So I really enjoy sharing all the things that I've learned with other people. And so I want to help you by avoiding some of these things and, not doing the wrong things. Okay, so that was kind of a long-winded introduction, and now I'm going to get into our 7 common mistakes. And I want to call out too, these are not just made by beginners who are starting in notes. These are also made by very experienced people. In my humble opinion, some of the most experienced note investors are some of the worst note investors in a lot of ways. And I'm going to get into that and you'll know more what I'm talking about. Okay, so mistake number 1 is spending either too much time or too little time learning in that learning phase, right? So when we start in notes, there's always this, and maybe you're in this right now. There's like this beginning phase of, okay, let me see what this industry is all about. This seems kind of interesting. Is this something for me? How would I go about it? Is this something I should get involved in? And then you move into like actually like learning and doing stuff. And I would say people in general, probably not just investors, but there's kind of like 2 ends of the spectrum where people can go wrong. One would be the engineering style analysis paralysis, right? And these are the people who, I mean, granted, I have a background as an engineer, but they like to analyze everything to the nth degree and analyze. They always want more information. They're always gathering more data. They're always thinking about this and hemming hawing about that. They never actually freaking do anything. Or if they do something, like an extraordinary amount of time has gone by and it's just absurd, in my opinion. So that's one mistake. So that might, help prevent you from making mistakes. But God, you're wasting time. And the other thing I'm going to talk about more as we get into this is there's a lot of things you kind of learn by doing. Like getting training, getting education up front is super important. I would never minimize that. But you also learn a lot when you actually do stuff. So if you get stuck in this analysis paralysis thing, you never get the real world learnings. Like it's really deadly for your investing career. The other end of the spectrum is what I call like ready, fire, aim, right? Like these are your like sales. This is like the opposite of your engineering mentality. It's like your, kind of sales guy mentality. Like they just want to jump in there and do stuff and think about the details maybe later on, if at all. That's dangerous as well too, especially in notes, right? Because it's important we find notes that are right for us. The due diligence process is really key. People will try to sell you notes with title flaws and other issues. And so if you just go out there and start spraying money in notes, that could be a very, very expensive education as well. What we want to do is be kind of like somewhere in between these 2 extremes. Although one thing I've learned that's interesting, right? Like if I personally tilt on one way or the other, it's more towards the analysis. Where I think my mindset's a little bit unique in this, though, is that I can kind of run the balance between being rigorous at analysis, but then pulling the trigger on stuff and being willing to learn from experience. I don't recommend either extreme. They're not good. If you had to pick one, the ready, fire, aim people, if they survive the initial mistakes, they tend to do better overall because they get up and going a lot faster. But don't pick one of these, be somewhere in between these extremes. And so that's what not to do, but like what do we actually do? So how do we not spend too much or too little time in this kind of learning phase? Well, number one, take some amount of time, get familiarized with the space. Um, read some things on the Facebook groups and the forums, watch videos, listen to webinars. Maybe this is part of what you're doing now, like this webinar in that space. And then number two is like figure out what your goals are, like really understand what you're trying to achieve. You're going to need to get some training, right? I mean, you don't want to just DIY this stuff. A lot of times people go around and try to find somebody who will mentor them for free. It's challenging unless you just happen to have like a close friend in the space who's willing to do that, but it takes quite a bit to teach someone all the nuances of how to do this. Um, so you do need to get some kind of training. And then no matter what training you do, you're going to have to put your personal systems together. At the end of the day, everyone does this a little bit differently when it comes down to it. And then to get started, I recommend buying a performing note first, even if you plan to get involved in the non-performing world. That's what I did when I got started. And what I found was once I bought that first note, um, I learned so much just about how the sales contract works and pricing and, dealing with the different vendors. I mean, you can study, like I said, you can study till you're blue in the face, but like there's some stuff you're going to learn when you actually do a deal. And then usually once you get over the hump of that first one, you tend to be off to the races. At least that's what happened with me. And, one big question I get a lot is like, well, how long does this take? It mileage varies depending on how much of a focus you're putting on this, right? But generally, like people have day jobs, other activities, they have families, blah, blah, blah. I would say if you're going at it, like expect this to take 3 to 6 months. Like I think that's kind of a reasonable amount of time. Now, if you're like full force, like I'm all in on this, you can do it in 30 days. Absolutely. You can do that. But I think with you know, when people have other priorities, which most people do, I think, 3 to 6 months is a reasonable amount of time. You start going beyond 6 months, you got to question like whether you're just sort of going in circles. Like I said, for me, it took 12 months before I started to when I bought a note. Part of that was, information was a lot more opaque back then. And when I started, I didn't have somebody to kind of show me step by step, here's what to do. And so that took a while. But yeah, like I said, you can do it within 30 days, but you would need like the right guidance, someone showing you, and then a lot of motivation and the time to sit down there and dedicate and do it. All right. Now, mistake number two is not knowing what you want. And I'm talking here about goals, like why you're interested in investing in notes and what you're trying to accomplish, right? Like note investing is kind of a broad area. There's a lot of detail, there's a lot of nuance. And if you don't know what your destination is in that, like you're really going to get lost and go in circles. And this happens to people all too often. So when we think about what we're trying to achieve, right? Like some of the common goals overall are number one, and this is really the best place to start, would be growing a self-directed IRA account. So when I started, I opened a self-directed IRA account and I transferred some, not all, of my money from a traditional IRA account over to buy my first note, right? And I think like growing a retirement nest egg is really one of the best uses for note investing. Now, you also may be wanting to create a side income. That's something I did, right? So doing something after tax, say in an LLC. For me, I've got basically two sides of my business. I've got my self-directed IRA account that I'm focused on growing. And then I've got my LLC where I use outside funding and I do things that are post-tax. You may want to create a full-time income. You can absolutely do that. That takes more time. And especially if you're doing it in this market where the focus is more on performing notes, like growing a full-time income implies buying a lot of performing notes and then financing those with outside funding. So that takes time, right? Because you got to get up to speed on buying notes. You got to buy a lot of notes. You got to figure out how to do outside funding. And then it takes time to get all of that together. Like doable, but not a quick thing. If you want to do the full-time income thing, that's, at least a few years to do that. There are a lot of investors who use notes as a low cost acquisition strategy for REOs, right? So sometimes people will buy non-performing notes, ones that are vacant, and then either foreclose or get them through cash for keys or some other means. And now they've got a fix and flip property with a low cost basis that they can either like fix and flip or fix and turn into a rental. And now they've got a low cost basis and they weren't competing with everybody and their brother that's trying to buy those properties. And then the other thing that Seymour that's increasingly common is you see kind of aging landlords who don't want to deal with the property management anymore, sell their properties and convert them to notes. I'm not, this is kind of a subject for a webinar for another time, but what more and more people are doing is so they have family of rental properties, sell the rental property, create a note, hold owner financing. Now you're getting cash flow from the note, and then there also can be some tax advantages to that because it's treated as an installment sale instead of an outright sale. And then the other thing you want to know is not just what you want to achieve, but why, right? Like it's really important to know the why behind things. If the why behind you're doing something is strong, then you're more likely to follow through on it. So if you're self-directed IRA account, you probably want to have a more secure retirement. That's what I have. Or if you're creating side incomes, you may want to be less dependent on a W-2. That was really a lot of my goal too, right? I enjoyed my W-2 jobs. I mean, I did. I enjoyed being an engineer, enjoyed being a product manager. But I know that things can change, day to day. And so I like not having all my eggs in that basket. And so for me, notes is a really awesome way to diversify away from some of those other things. Or you might want to eventually leave the W-2 entirely. Like I said, if that's your goal, just have some strategic patience and realize that's like a multi-year thing. And then the other thing is it's fun, right? For me, note investing is also kind of a hobby. There's absolutely nothing wrong in the world with investing in a certain space because you find it entertaining and fun. And yeah, so your goals don't have to be financial, right? It can be a great hobby. But if it is a hobby, just understand that's what it is. Just be eyes wide open about what it is you're doing. And then when we also get into what we want, it's not just the high level goals, but the types of assets that we might want to buy. And again, like why you would choose all these different options, that could be a whole webinar in and of itself. But if we look at the world of notes, even though that's small in and of itself, there's a lot of different areas you can play within that world. So performing first, seconds, sub-performing loans, which I happen to like a lot, non-performing notes where you want to get them reperforming, non-performing notes where you want to acquire the property. And then you want to think about your locations. Are you going to stay in your backyard? Are you going to invest in specific states or specific cities where you have a team on the ground, attorneys, realtors, people who can do property preservation, people who can do rehab, or are you going to go more nationwide? And then think about how you're going to manage the portfolio. Are you looking for like a small number of notes that you're just going to do yourself? Are you going to go bigger? That implies you need some more sophisticated systems, or bigger yet, where you might need to hire help with your portfolio as well. That's what I do. I have, Karen helps me part-time, and I would not be able to run my portfolio without Karen. That's for damn sure. All right, and mistake number three now, this is a big one, and it's not having realistic expectations. And I want to dive on this one a little bit because the reality is, right, markets change over time, and you really want to be realistic about what you can do in today's market, in tomorrow's potential market, and what you can do sustainably over time. One of the cool things about notes is you can do it a lot longer than when you would think. When I started, I was originally thinking, well, okay, I can do notes until I'm maybe 70 years old. I'm 49 right now. And then a couple of years ago, I was at the Paper Source conference. I was talking to a bunch of dudes that were like well into their 80s. And I realized that, wow, you can really do this stuff for a long time. So if you do it right, it can be relatively passive. So I want you to think in terms of like a really long game instead of these like quick hit things that are maybe that from past markets that are maybe unrealistic. So we kind of want to be in like Warren Buffett mode, right? If you're willing to be in Warren Buffett mode and play a super long game over decades and notes, you're going to absolutely kick butt. You're not necessarily going to kick butt like through the rest of 20 by the end of 2025. But let's look at like what returns are realistic in at least today's market. And again, these things change over time. Like if you're watching a replay of this 5 years from now, 10 years from now, the market might be entirely different. But talking about like where things stand today, if you're buying performing notes, like pretty solid performing notes, especially with equity, you get about 9 to 13% returns. That doesn't sound sexy, in a lot of ways, right? But if you compare it to the stock market, well, one, that's kind of at least the same or better than the stock market, and there's a hell of a lot less volatility, and it's way better than what you'll find in the bond market. If you're willing to buy what I call subperforming notes, which these are notes where they're cash flowing, the borrowers are making payments, but they're not necessarily making payments reliably. So the borrower might make a couple payments, miss a couple, get behind, catch up, blah, 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 but the cash flow is there. Those notes get discounted more, so you might be able to buy those at 12 to 20% returns. And then if you're doing non-performing returns, that's really kind of all over the map. It's hard to give a guideline, but I call it like 10 to 30%. These days, the supply of non-performing notes is relatively lean and pricing has gone up. That's why I focus more on the performing and subperforming notes in the last couple of years. So those are kind of our realistic returns for today. But right, if you compare this to some of your other investing alternatives, I looked this up just the other day. So about 4.3% return for treasuries, 5.3% for corporate bonds, and about 10% long term for the S&P 500. So while this isn't like the flashy, like, hey, make 200% or infinite returns with no money in the deal, blah, 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 it's pretty damn good compared to a lot of your kind of baseline alternatives. That's why people are interested in this as an alternative asset class. So, bottom line is you can get returns that are in line with the stock market, long-term stock market average, but and higher than treasuries with way, way, way less volatility, which can also be good in recent markets, right? So the week I'm recording this, I think stock market dropped like 5% yesterday because of the tariff stuff. Maybe it'll be like COVID where it'll tank and wheel around. We don't know. But I know personally, having invested in stocks, since the 90s and through the dot-com boom and bust and then the financial crisis, stock market can rip down 30% pretty quickly, faster than you would think. Notes, if you're buying the right notes, that's a lot less likely. So, you might not get what I call these novelty returns, right? Like people love to brag about how, I bought this note and it worked out and I got paid off and I made 100% of my money in a relatively small amount of time. I've got stories like that I can share. I'm not sharing those today. But the reality is if you do a lot of these, you're going to get some of those like really outlandishly good deals that you can brag about, right? Like I think I've done like 150 note deals at this point. And yeah, I've got one. If you do enough, you're going to have ones that turn out phenomenal that you can brag about, but you don't want to go into note investing expecting every deal to work out that way. Or the other thing people do, kind of dovetailing with mistake number one, is they go, well, I'm only going to do a deal if I can get some like outrageously good return. And then what those people end up doing is more often than not sitting on their hands, their money's just in cash, they make nothing, or they get this killer deal because they missed something and they made a mistake and then they get hosed. So let's avoid that. All right. Now, mistake number four, and this one's kind of wide ranging, but I call it a bad approach to pricing. Within the world of bad pricing mistakes, there are many of them. I will say by and large, the vast majority of investors are really terrible at pricing overall. And that's part of why you don't see kind of standard market pricing in notes. Pricing of a given note will vary a lot depending on who's selling it, why they're selling it, a number of other factors. What's cool about that is because buyers and sellers are often so terrible at pricing, if you hang around and you have a big network of sellers and a big network of buyers, you can do really well in this market. But don't make these mistakes yourself. All right. So, one pricing mistake that's very common is anchoring on the pricing from previous markets. And what I mean by that is 10 years ago, after the financial crisis, right, there was this flood of distressed assets on the market. So you had a lot of inventory, prices went down. The market was even smaller back then, so not as many people bought these. And so you could get notes for prices that were just absurd and that you can't touch today. And so this is where I was talking about how some of the most experienced note investors can be some of the worst. There are a lot of old dudes who are kind of waiting to buy more stuff at the pricing that they bought 5 and 10 years ago. And so they just end up sitting on their hands, looking at a lot of stuff, maybe wasting time, but not actually buying stuff. What we need to do instead is understand for a given deal, what are the costs? What are the cash flows back in? What's my return? What's the relative risk? Does this deal, does the risk return ratio make sense? Okay. And maybe back in the day, I could have gotten a better risk return ratio and I can't now. If it still makes sense, then I should do it. And if it doesn't make sense, then I better not do it. Okay. So let's not get too caught up in, war stories from 5 years ago. And then the other one, and this is a big one, and I've seen experienced people do this too, is they don't take proper consideration of their costs, right? So when we're pricing a loan, we might look at what we pay for the loan, the payments we get for the borrower, but there's actually a lot of costs that we need to factor in. So doing due diligence on the note costs money. We might be pulling an O&E report, we're getting photos or BPO, we're having attorneys review things. On an ongoing monthly basis, there may be servicing fees, so we may be paying $30 or $35 a month for servicing. If it's a delinquent note or the note goes delinquent, we might have to take it through the legal process. That's not cheap. And if the borrower defaults on a loan, if they're not making payments, they're usually not paying taxes and insurance. So you can have expenses related to that as well. And then the legal process can be very unpredictable, even in non-judicial foreclosure states. I mean, all the time I have court dates get bumped for a month or 2 months just because of whatever reason, right? It just happens. And so if you're paying taxes, insurance, and servicing while that goes along, well, your costs just add up. Your timeline drags out, and that really affects your returns. If you end up with an REO, either through foreclosure, or cash for keys, or whatever, there can be expenses to preserve the property. I just paid earlier this week to have a home rekeyed and secured. You might need to have, depending on the time of year and where it is, you might need it winterized so you don't get busted pipes. You may have to do a clean out. I've had hoarder houses before. That's not fun. Um, if it becomes an REO, your local city code folks who sometimes operate a little more like the local mafia, they might say, hey, here's an out-of-state person with this property. Maybe they'll be my piggy bank. Maybe I'll just start sending them some code violations. So we need to factor these things in. At the same time, we can't be too precise, right? And this gets back to that first one of like, let's not be over analytical. We need to be analytical enough. But the reality is, especially if you're talking about non-performing notes, I've done a lot of these and I've looked at the data that I've collected. The costs that you incur vary a lot, right? So like I've had some where legal process went smooth, got the REO back, it was in good shape, I sold it, I cruised along. I've had other ones that were freaking living nightmares where borrower filed bankruptcy to drag things out. It was a hoarder house, had all these other problems. So we can't be too precise either. So we need to factor these costs, but we can't be too precise as well. And then the other thing that I include, which isn't so much a pricing mistake, this is maybe more of like a systems operational mistake, but not saving your work. So one of the things people still like to discuss on the related Facebook groups and forums is like their favorite financial calculator. A financial calculator to do pricing will give you the right answer. Now, number one, if you're factoring in costs, that's a little more tricky to do. It's really a lot easier if you put this stuff in a spreadsheet. Number one, it's much easier to capture your costs. Number two, you can save it. One of the things I love to do is save the documentation on the upfront of a deal, my pricing, my thesis, what I expected. I write that stuff down because then when I get to the end of a deal, I love to compare because it's always different, right? Like the before and after. So save your work when you're doing this. And then number five, okay, so that's pricing. Number five is not having a standardized due diligence process. So when we do due diligence, there are a lot of different steps, and I've got a big checklist for this. But especially if you're buying multiple notes, you can really end up in tail chasing mode, or you could miss a critical step. So what I went throughout my business, not just in the due diligence process, but I want standard operating procedures, like checklists that I can follow to make sure that I have all of the bases covered in everything I do. It's really going to make your life a lot easier. One of the things I really like about note investing is that While every note in every deal is kind of its own special butterfly, um, it really lends itself to a repeatable process, right? So note investing, and I'd say real estate in general, just kind of begs for scripts, checklists, routines that we can follow. So we want to have those in place. It not only makes us more accurate, it keeps us from missing steps, but it makes us a lot more efficient in what we do. And number six, and this is a big one that I learned the hard way myself. So when we invest in notes, we work with a lot of vendors, right? So we'll have a loan servicer, we'll have an attorney. If we have an REO, it might be doing property preservation, might have realtors. And when I went into note investing, I kind of went into it with the assumption of, oh, I hire these vendors, they do these jobs, and I'm all good. Well, I mean, it's kind of sad. You could argue maybe it's not right, but the reality is you can't just depend on vendors to do all your stuff with you. You need a system for following up. Because what happens is if a vendor doesn't do something they're supposed to, then it falls through the cracks. Now, if you're doing like one note, if you're really doing like less than five notes, you're just doing a couple, then you can kind of keep stuff in your head, right? And you're not necessarily going to miss things. But definitely by the time you go over 10 notes, that becomes kind of impossible. And when you get up to like 50, 60 notes, like I am, it becomes really impossible to do. So we need some kind of system for basically doing trust but verify and making sure that our vendors are doing what they're supposed to be doing. Mistake number seven is I call it not rolling with the punches, right? So one of the big things I learned in notes is that note investing is kind of like the game Shoots and Ladders, right? Or it's kind of like being a professional gambler or playing professional poker, right? Like sometimes you can do everything absolutely right, something bad happens. Other times you can make a bunch of mistakes and you come out smelling like roses, right? So day to day in note investing, things happen all the time, right? You might buy a note, it's a good deal, and then the servicers are dropping the ball on the loan transfer, and all of a sudden the loan transfer takes 3 months instead of 2 weeks. I've had that happen. Or especially in the non-performing world, you have a deal with a borrower to reinstate a loan and you think you're good, and then they don't follow through. Or the other one I've had happen is you get a property back, you think it's going to be great, and you find out the inside is just wrecked and you take a beating. And I've had the opposite too. I've had properties that I wasn't super excited about taking back. I'm like, this could get dicey, and the property turns out to be worth more than I thought, and I end up grit. So you'll find that note investing is kind of like Shoots and Ladders, right? You're going to have good days and bad days. And what you need to learn to do, and this is where the mindset is not for everybody, but you need to learn to be kind of like even keel, kind of blah. Like you get good news, okay, great. I don't jump for joy. Bad news, okay, fine. Not the end of the world. This will work itself out. Because a deal is not over. I always say, like, it's not over till the money hits the bank, right? Then you're like done, done. So even if everything's looking great until that money hits my checking account, I'm not too excited. And at the meantime, right, if I do a lot of deals, I'm gonna have good ones, bad ones. If I get knocked sideways on some, like I've gotten upside down on note deals. Anybody who tells you that they've never lost money on a note deal, number one, either has not done as many note deals as they're claiming and they're just lying, or either they haven't done as many deals as they said, or they're just lying, right? This is Shoots and Ladders, ups and downs. Net, net, it will work out great if you do enough of these, but you are going to have some bad days and you just need to be prepared for that. So while I was putting this together, I started with seven and then I had other things I wanted to talk about. So I've got some bonus mistakes in here to share with you. And these ones are a little bit more specific. But not taking BPOs at face value. So one of the things you want to do in your due diligence process is get photos of the property and get kind of some estimate of the value, right? You're doing this because if you end up having to foreclose or take the property back, you want to know what that's worth and how you're going to do. Now, when I was a newbie at this, and I went into notes a little different than most people. I actually went into notes without any previous real estate background. You can do that. It's not required. If you have some real estate background, it can definitely be beneficial. It can also hold people back in some ways because they don't. Sometimes people have done a lot of other real estate, have trouble adjusting to the way that notes work. So it's a mixed bag. But anyways, I went into it without it. And I tended to adjust BPO values a little bit, but not enough. So here's a big like I don't know if I'd call it a secret, but it was a secret to me. I spent $15,000 on training and like nobody told me this before. Okay. So when you're buying notes and you're getting photos, right? You're buying the loan, you're not buying the property. So you can't see the inside of the property. So if you get what's called an exterior BPO, an agent's going to go by, they're going to take photos, they're going to pull comps, and they might make deductions on the value based on flaws they see on the outside of the property. But they can't go in the property. So what they effectively do is they make no deductions for the inside. Now, the loans that I buy, I try to buy ones where still owner occupied, the borrower's made some payments in the last year, right? Some signs of life. And my goal when I buy non-performing notes is to try to work things out with the borrower. So when I have to foreclose, which I've done numerous times, if you've got a borrower with a lender like me that is like willing to go out of their way to work things out, but you say, nah, I'm not going to pay, I'm going to ride the ship down in a foreclosure, those people live a rough lifestyle. Okay. They don't just neglect their finances, they're not doing maintenance on the house, they're neglecting like everything, right? So if I do get a property back from that kind of borrower, the inside is going to be pretty freaking far from pristine, right? And so what I found by doing a lot of these, I looked through originally a sample about 15 or 20 of these. I looked at the initial BPO values I found, and then I looked at my proceeds from the sale. And there's a lot of variation in the data, but I found that generally my proceeds from a sale were about 60 to 70% of my exterior BPO value. So when you pull that BPO, and if you're thinking the non-performing REO scenario is likely, you need to knock down that BPO value and adjust it to be on the safe side. Because this is how I got upside down on a deal or two early on. So please don't make those mistakes that I did. Okay, and then the other one is not adapting to market conditions, right? So even in the 8 years or so that I've been active in notes, market conditions change a lot, right? So if we look at like 5 years ago, pricing was lower, there was more distressed assets, there was more of a focus on non-performing versus performing. Today's markets, not a lot of distress. Property values have gone up a lot in the last few years. And so especially notes that were originated 5, 10 years ago, those things have a lot of equity. So there's more of a focus on performing notes. So what you don't want to do, and what a lot of people do is, right, they'll go to a conference and people will tell these like war stories about, oh, I bought this non-performing note for 20 cents on the dollar and I got paid, and they go like looking for that deal. Well, guess what? Okay, number one, here's another thing I'll let you know. People lie at conferences all the time. Like I've done a lot of research on people in the market, and like I've had people tell me things that I knew were wrong. I'll never call them out on it face to face, but people lie at conferences a lot. So number one, their deal that they told you about could be a lie. Number two, it's probably not a lie, but it's probably cherry picked from a different time and place in a different market. So what people tend to do is they go out looking for a kind of deal that maybe existed 5 or 10 years ago and doesn't exist, and then they just waste a lot of time. So make sure you're adapting to today's market, and also just be aware that the market conditions are going to continue to evolve. Like this is a moving target. When I mentioned earlier about when I was at the Paper Source conference and I was talking to some of those people who had been active in notes, in some cases back to the 1970s. I love talking to those folks because it's fascinating. I like asking about like the different market conditions and how things evolved, right? It's always topsy-turvy. So the good thing about notes, because there are so many models, and I mentioned earlier about how like there's all these different ways you can attack it, there's basically always going to be a way to make good money in any kind of market. Just you got to match the strategy to the market condition. And so that we need a really good like fundamental understanding of notes, not just trying to follow a recipe from some specific point in time. Okay, so that's a bunch of things not to do. And so now for a bonus at the end, I'm going to talk to you about what to do. So I mentioned that I put together a framework for buying notes that I call my Note Launchpad framework. And so there's basically 5 phases to this. So number one, we learn the foundations of notes, the actual fundamentals. This is really what's going to set us up to match tactics to specific market conditions. And then we're going to start buying notes. And actually, I recommend people start buying notes earlier than other people do, right? Because there's the buying process and there's the working out process, right? So then we start buying notes, and then we want to start adding value to our assets. So there's a big so yes, you make a lot of your money on the buy, just like kind of any other investment. One of the other cool things about notes is we have a lot of leverage to improve the value of our assets after we buy them. So once we've got this formula together, where we kind of know the form, we know the foundations, we can buy notes, we can improve the value of our notes. Now we can start scaling things up, right? Now we've got our templates and our systems, and we can start to rinse, repeat, do more, do more, do more, do more. Once you start scaling, the next issue you're going to run into is everybody, I don't care who you are, like you're going to run out of funds at some point, right? And so if you choose to go this route, not everybody does, you don't have to, but you may want to take on outside funding to continue your growth. So in the foundations phase, you're doing things like we're learning about our money mindset, setting goals, like I talked about earlier in this, the fundamentals and the mechanics of how note investing works, getting a business set up. So whether that's an LLC outside of our retirement accounts or setting up a self-directed IRA. And then we're also going to need to do some level of marketing. I know that scares the pants off of people, but it's actually like much easier than people think. So marketing in terms of building a network that we can buy notes from. And then also if we're going to do outside funding, building that network of funding. And then when we start buying notes, all right, well, number one, we're going to need to find sellers that will sell us notes. And we're going to see a lot of notes. So we're going to need to know which ones fit our business model and that we might want to make offers on, because the reality is most of the notes that we find won't. Once we find a note and we're like, okay, this kind of fits what I'm looking for, I got to know how to price this, right? Then we price it, we submit offers. If our offer gets accepted, then we need to be able to go through our due diligence process and close the deal. This is really like the meat and potatoes of note investing. And so this is a quote from a student that I've worked with. So, and I forgot to put their name on here. But Dan put together a great step-to-step, easy to follow manuals. Engineering background shines. His teaching style is straight and to the point and explains the ups and downs, brings big earning potential with notes, but also cautions the downfalls, which sometimes gets forgotten with other courses. I would say that gets forgotten with a lot of things. It also includes a variety of spreadsheets, which will save you time. So that's our buying notes, right? But then I mentioned we can also add value. So number one, we want to know like our strategy. Are we rehabbing houses or rehabbing borrowers, right? If I buy a non-performing note, I prefer to rehab borrowers, but a lot of people rehab houses. Nothing wrong with that. We need to have our systems in place to follow up with vendors. I do a lot of regular portfolio maintenance on a weekly and monthly and quarterly basis. How to do right by your borrowers. So there's a lot of compliance around owning a loan with that's owner occupied. Generally, I let servicers handle a lot of the day to day, but we're also going to make a lot of decisions. So we don't just want to be compliant in how we deal with our borrowers. We also want to do right by them as well. We need to know how to work out non-performing notes and put together forbearance agreements. We need to know how to deal with REOs. I didn't even really get into that in this so much, but when you get REOs, it's not quite as straightforward as you would always think. And then we want to understand our exit strategies and how to execute on them. So if it's performing notes, it could be buy and hold. It could be rehabbing loans, rehabbing borrowers. We might just be buying the note and reselling it or using it as a property acquisition strategy. Then we can start scaling up. And like I mentioned earlier, if you're doing less than 5 notes, it's fairly easy to kind of keep everything over in your head. Once you get beyond that, we need some systems. We need to be able to have a CRM. We need reminders. We may be wanting to start to hire outside help as well. And I am a huge, huge, huge proponent and fan of standard operating procedures, right? Because like I said, even though every loan is its own special butterfly, it lends itself to a checklist type process. So I have standard processes for doing loss mitigation, keeping track of my deals, keeping track of forbearance agreements, managing REOs, and a lot of other stuff as well. Okay, and then it's entirely optional, but if you decide to fund your growth and scale up through outside funding, you're going to want to know the right way to do about that. Once you crack the code on funding, though, it's really cool because you can really scale up at some point. You do need to be careful in how you fund growth. There are numerous cases out there, and not just notes, but the broader real estate investing world of bad actors who raise funds and then don't do right by their investors. So if someone's unethical, I don't know that I can help you with that, but a lot of the problems happen when operators don't know what they're doing, right? So an operator doesn't know what they're doing, they get in trouble. And then when people get themselves in a jam, a lot of times that's when the unethical behavior goes out, or they don't deal with their investors appropriately and they set unrealistic expectations. So I show people how to do that properly, right? So you have to understand there are SEC rules that govern taking outside investments. It's really important that you screen your potential funding partners, right? These are like partnerships overall, maybe not quite to the degree of a marriage, but what I think you'll find overall is raising funding is a lot easier than what you would think. And so the key is you want to find the right funding. So it's actually the hard part is not so much finding part funding, but you want to screen the right folks. And then I also teach people how to become a dependable operator and then how to get creative with their deal structure. So if you're taking outside funding, there's a lot of ways to do it. You can sell partials, you can do loan hypothecations, you can do joint ventures. There's all kinds of stuff. But the main thing is, one of the other things I learned that I didn't expect going in is that funding is actually like one of the easier parts of the business, but it's really critical that you do it right. And so what I did was I packaged all of this information into the Note Launchpad online training course. And so basically this has everything soup to nuts, all the videos, all the education, the downloadable checklist, the calculators, all that stuff that if you take this and run through it, you can get going in 60 days easy, potentially 30 if you're really dedicated. So if you can imagine, right, this is the thing that I didn't have when I started that I wanted. I didn't have this like step-by-step process to be able to quickly and accurately get up to speed, be able to find things, do due diligence, price them, and then all the systems and processes. I had to build all this crap myself. And so it's now possible for you to just take advantage of some of the potential in notes, but without necessarily going through all that heartache that I described in the beginning. Okay, so here's how it works. So I have it broken up into phases, just like my system. So phase one of the course, we learn the foundations, right? So we learn about goal setting, the right mindset to approach this with, the note fundamentals, right? That you'll be able to use and leverage and actually create your own strategies. And so phase one alone, like you're way ahead of the game compared to like 99% of the training options out there. Then we get into the buying notes phase. And this is huge, right? So many people like dabble in notes, like they get interested. And there's a lot of people who have paid like 20,000 plus for training that never bought a note in their life. I really focus on getting people over the hurdle of buying that first note because once you do that, you tend to be off to the races. So it's really critical that we get to that stop. So to do that, number one, you get my complete list of sellers, right? And I also teach you how to find your own note sellers as well. There's a myth in the market that good notes are hard to find. That's not true, right? Like either people are not looking in the right places, or more than likely, they don't take action on the ones that they get. And they don't take action because they don't know exactly what to do step by step. And that's what I help people with. So I show them where all the notes are, more contacts for buying notes than you would ever need. And then I show you through my fast filtering method how to filter those notes to find the ones that are right for you. And then we go into the pricing so you can price them and start making offers. And then when you get offers accepted, then we can roll through due diligence and begin buying. So by the time you're through this, you're going to be like in the top like couple percent of investors. I shit you not. Then once we've bought a note or some notes, now we want to start making an outsized return, right? So if it's a loan that's like subperforming or non-performing, I'll talk about loss mitigation, different exit strategies, how to optimize those. I also have calculators for those as well. And then I'll also show you how to manage your portfolio very efficiently on a day-to-day basis and how we keep things from falling through the cracks. Because when vendors drop the ball, that costs us money. And then by the end of phase three, you'll be a really competent note, what I call a note operator. Then once we're a good node operator, we can begin scaling up, right? And so this is the systems and processes savvy section that gives you all of the tools, tips, and tricks you need to really scale up our portfolio using a CRM, standard operating procedures, working with an assistant, everything you need to do to now turn the crank on this. And then phase five, I talk about how to use outside funding. So there's a creative finance toolkit, teach you all my creative financing methods so that you can basically do an unlimited number of deals overall. And these 5 phases, they're all sometimes people use the course because they just need 1 or 2 phases. You don't necessarily need to use all 5, right? Like some people like, hey, I want to grow my self-directed IRA account. I don't want to use outside funding. That's totally fine. I designed this so there's enough value in each of the phases that if you should just care about 1 phase, that the course makes sense financially. So what's all included in this? There's quite a bit of stuff. First and foremost, access to off-market note deals. So when I started Note Launchpad, one of the big questions I got from people was, well, can you sell me notes, like specifically? And for a while, I couldn't do that. But now that I own Call the Underwriter, I've got more access to notes than I've ever had. So I'll have periodic tapes that I will send out to my students that are only available to people who are students of the Note Launchpad. And so I kind of tee these up on a platter for folks. So if you're concerned about finding deals, even though in the course I show you how to find more than enough, I have ones that I will give to you specifically so you can never worry about finding deals. I also do periodic Note Launchpad alumni calls. So some of the early feedback I got on Note Launchpad is like, Dan, this is awesome. All the information's there. But I don't really just want an encyclopedia. I want you to help me with this as well. So I do periodic Note Launchpad alumni calls. This is an opportunity for you to have me review your deals, ask questions. I'll also have a new learning topic. So what I do is I get questions from students, I'll create new content on that and then add it to the course, right? So like some of the things I've done in the past were interpreting loan servicer statements, like how to do QuickBooks, other things. That's the other thing about the Note Launchpad course is it's a living thing. I make updates to this like a number of times a year. So it's not just this like frozen course from like some time ago. It's a living, breathing thing. We've also got a private Facebook group. They're called Note Ninjas. This is another avenue to ask questions to me. And then a lot of times when I see new tapes or new sellers, I'll put posts in this group. So this is my way of like distributing information to people more quickly. You also get direct access to me. So when students have questions or they need help with something, particularly their first deal, right? Like one of the things I've seen a lot is someone goes through the course, they're like, okay, I've gone through it. I feel like I understand it. I found my first note. I priced it. I did this. I did that. But I want you just to look at it before I pull the trigger so I don't make a mistake. I'm always happy to do that for students. So, you can always just, send me an email, get me on the phone or do a Zoom call. It's really important to me that when I work with students that they get over that hump of buying notes. And so I do everything in my power to help them to do that. So, basically, if you look at the total value of all this stuff compared to other courses, we've got access to deals, which alone is pretty invaluable. Alumni calls, I'll review your first deal, private Facebook group, the Note Foundations, marketing, my list of sellers, um, information on how to find your own sellers, the filtering spreadsheets, the pricing strategies for both performing and non-performing, the loss mitigation methodologies, the loan forbearance calculator, all the systems and processes and SOPs, the creative financing toolkit and all of that, super, super valuable. There's way, way more in this than other programs that are 20, 30,000 plus, and it's not even close. So specifically what's included. So if we look at the training videos, which is kind of the bulk of it, there's about 30 plus hours of training videos right now that increases every year. You get my private list of note sellers and their contact information. So you can immediately download that list and start reaching out to these sellers to sign their NDAs and get on their list and start seeing more deals. You get access to my off-market note deals, which are only open to students of Note Launchpad. You get access to the alumni calls. You also get the recordings of the previous alumni calls that are in the course. All my pricing calculators for both performing and non-performing, the loan modification calculator, my checklist for doing due diligence and filtering, and then the note portfolio operations checklist. So there's a lot of stuff. This is meant to be comprehensive, right? So one of the other things too, when I created this is I didn't want to do the standard like real estate training thing of like, you buy something and you think it's all inclusive and then you find out later, oh, to get this other thing, I got to pay more. Oh, and then to get this other thing, I got to pay more. I didn't do any of that in this. It's just got everything in there that you could want. And there's also lifetime access to all the materials, right? So this thing is future proofed. You buy the course, once you're in, you are in. You're not like re-upping every year. And then as I release new materials, you get access to those new materials as well. You're not going to come back later and go, oh, well, if you want access to this, you have to pay more. No, just everything's included. There are also a bunch of bonuses in the course. So I have one thing in there called Behind the Scenes of a Notes Business, where I go through some of the day-to-day of what it's like to actually run a note portfolio. And I mentioned there are bad actors lurking, right, and everywhere. And I have another one called Scams, Scandals, and Shadiness in the Notes Business, where I do everything basically short of naming names. And I let you know about people to watch out for in the business, right? Like I don't want my students running into bad actors, and I'm fairly, it's behind a paywall, not super public. Like I don't want to get sued by someone, so I take some precautions there. But especially if we talk on the phone, I have no problem letting you know who the bad actors are to avoid because they're not always obvious, right? And then it's fashionable to talk about passive income and how easy it is. And sometimes this gets related to notes. I've got another section called Passive Income is a Lie. Like what we can do is the long story, the TLDR of this is we can do work up front and buy a solid performing note, and then the income is passive after that, but we have to do some work up front. And this is getting away from the magical rainbows and unicorns. I've got a whole other deep dive on seller finance loan, or sorry, understanding servicer loan pay histories. There's another one on grading seller finance notes. There'll probably be more seller finance material coming later in the year. And then there's also a 14-day money back guarantee. So it's a no questions asked guarantee. So if you get into this and you're like, oh, wait a minute, this isn't for me, you just let me know. It's a we call it two-way door decision. Okay, so the big question is, what does this actually cost? Well, I mentioned it's not $16,000. It's not five figures either. The course generally sells for $24.97, and that includes the lifetime access, the alumni calls, private webinars, and then access to new materials, and also the access to private deals. But I've got a spring promotion that I'm announcing today, and so you can begin for as little as $150. So basically, there are two payment options. Number one, you can pay this in 12 monthly installments of $150 each. Now that still has lifetime access, right? So it's $150 for 12 months, but it's not a subscription. On month 13, you pay zero, but you still have access to the course. I just want to be clear about that because people always like misunderstand it. Or if you want a discount and you just want to pay everything up front, you can do $14.97 for the optional full pay, and that's $1,000 off the regular price. So this is as cheap as I have sold it. So the way to get started, you can go to notelaunchpad.com and get signed up there. I'll send an email out later with folks for information and just the links so they can just click them and get started as soon as they're ready. The spring sale is for a limited time. This is going to run through next week, and then that's it. And then I'm actually going to close the doors on it. That's something I haven't done in the past. So I'm moving to this model of we're going to have the spring sale. This is going to be open for a short amount of time. And then I'm actually going to close the door so I can focus on the crop of students that come in. And another comment from a student, this is Derek Loudon. So note investing, Dan is one of the good guys. His ethics, background, investing approach, and experience stand to benefit new and experienced investors alike. I've personally invested with Dan and feel the knowledge providing is extremely high value. So, who does this course make sense for? Well, it definitely makes sense for newbies, right? So if you're in that new mode and you're kind of getting overwhelmed by information and maybe you're going in circles a little bit like I did, this will give you the step-by-step process to save you a hell of a lot of time and energy. So a lot of it comes down to what's your time actually worth? And then for experienced note investors as well, right? I mean, this is going to give experienced note investors what they need to either scale up and do more or do it better, improve their pricing, streamline their processes. It also save them a lot of time. If you're creating seller finance notes, I'll show you how to structure them for maximum value. So to get started, go to the Note Launchpad website. Oh, that's a little bit of a duplicate. There's a guarantee. So there's another quote from student Eric Sage. So I can't believe the amount of detail and information he provided. One thing I'm known for is giving you all the details. And what's nice about the course is you can kind of pick and choose, right? You don't have to read it like a book, like front to back, cover to cover. There may be specific things you're interested in or specific things you need to revisit, and you'll get all the detail there. And then another student quote is, course is not a 40,000 foot view of the note industry, but an in-depth, step-by-step, firsthand account of what it is and how you can play a successful part in it. Whew. So that's what I've got for you today. I hope you enjoyed those 7 lessons, and I hope we learned some new things, and I hope I could help folks avoid some of the mistakes and some of the pain and heartache that I've made. So I will see you next time. Thanks.